there's lots of false bottoms in bear markets where it kind of lures people in. My guess is this scenario. Now, for swing traders like myself, it's awesome. We get long, we make money, we exit, we look for the next flush. But again, I think it will, once you get up to these upper ranges, these two lines, you'll see lots of bulls coming out. And I think that is the signal that you're going to have that next move.
Global central banks are currently ramping up their fight against inflation. This includes the United States, Europe, Canada, and some parts of Asia. In a previous video, we discussed the bank runs that are taking place in China. Be sure to check it out. Today we ask the questions: is the bottom in for the crypto market? What will things be looking like from here into the final quarter of the year? Are we to expect a recapitulation soon? Keep watching to find out as we answer these questions with the President and Chief Marketing Strategist of InTheMoneyStocks.com, Gareth Soloway. We have just seen the June CPI numbers at 9.1%. The UK numbers are at 9.4%, and even worse, we have the inverted yield curve that has always meant a recession every time it has appeared. So we ask, what is the next step from here? Is there anything to look forward to in the midst of all this doom and gloom? Soloway answers.
So believe it or not, I'm kind of counter, and I've generally made a lot of money being counter trend to what most investors will think, or even the media kind of spews and I found that to be very successful. So when everyone's lobbying and saying, hey, listen, the dollar is going to continue to rip, you got a war with Russia invading, and that's making people go to the dollar. You got all this fear out there, global recession. I look at the chart and I just say, okay, well, let me look at the chart. That's the true form of honesty. And what you could see here is you have some big trend lines that we just slammed into. So I actually went bearish on the dollar, and in doing so, I've accumulated some crypto, still in some. I've taken some profits on the latest run. But basically, weakness in the dollar is good for gold. It's good for cryptocurrency. It's even good for tech stocks. And we've seen a real move up. So if you look at the dollar, this is the weekly chart. You can see we actually had a nice pullback right after hitting this area. And, you'll get some bounces in the dollar because it's a strong trend. But overall, I think the dollar has more downside to go, which means that Bitcoin and cryptos should actually catch a little bit more of a bid here, probably to, Bitcoin 25.5, maybe 28, 29 to 30,000 over the next few weeks.
Gareth Soloway has made predictions earlier on the resistance range in the short term, after which we will see a steep fall down to very low support levels. Check out some of our previous videos for more on the details. Would Soloway's earlier predictions still hold to be true?
So I think that's important, so basically, if you look at this chart, right, so we slammed into this level here, which was the 2017 high, and we got below it. We saw the Voyager collapse, the Celsius collapse, Three Arrows Capital. I mean, all of that was bearish signaling, but the daily never had more than one close below the 2017 highs. It never had a secondary one below the lowest point here or anywhere. And that to me was telling me that smart money was buying in. And again, when you take that signal that you're still able to kind of, even though you get below the 2017 highs, but you fight back very quickly, that's number one, that's a bullish sign. But then if you look at the dollar and you say, okay, well, dollar's ridiculously extended. If the dollar starts coming in, that's good for commodities, which Bitcoin, you could arguably consider it a commodity now. That's good for crypto as a whole. It's good for gold. So to me, that was a good signal. And usually when the dollar pulls back, it's a risk on indicator. So when there's panic and there's fear, everyone still runs for the dollar. As much as you and I know that the government will continue to run up debt over the next 10, 20, 50 years, we're still kind of the strongest house on the street. And so when fear comes out, everyone wants to go into the dollar. So when the dollar falls, what it tells you is that people aren't as fearful, and by default, they're willing to take on more risk, thus buy cryptocurrencies.
That makes a lot of sense, and we can see how all of this is correlating. Even though the dollar is indeed losing its strength, it is still the strongest currency out there. But on the global scale, would it be wise for the dollar to be weakened to assist its allies with its currency? The chief market strategist responds.
So I'm kind of in that camp where I think that the the move on the dollar, and again, if I just zoom out here and let's just go from the beginning of 2022 right here, right? I mean, that is in currency markets. Now, if you're in crypto markets, this is like run of your mill type move up, right?
Right.
But in currency markets, this is ridiculous. This is
Yeah.
like ground shaking, massive earthquake type stuff. And so it does have an impact on foreign, allies. In fact, interestingly enough, I think today the ECB raised interest rates by 50 basis points in a surprise move. And
Yep.
what they're doing is they're trying to counteract the strength of the dollar. They're saying, okay, well, if we raise our rates because the US is raising theirs, our currency will kind of start to match theirs. And that's exactly what we saw today. So you're right. You're right. It does have an impact. There's no doubt that it coincides, I'm sure, with the midterm elections. I mean, one of the big calls, I think last time I was on, I said oil was going to trade sharply lower, probably getting to 85 to 75 going into the midterms. And I think oil was probably in around 120 or 115 at the time. And we've seen oil collapse back below $100 a barrel now. So, it's kind of case in point doing exactly what makes sense when you know about midterm and just regular elections in general,
Right.
as well as the worries about the recession and slowing down Europe and global demand. I mean, all these things coming to fruition, which, by the way, was counter to almost all the analysts out there.
Soloway adds that most of the analysts were predicting $150 to $200, but he thought that was not the smartest thing to do, because we can see the demand destruction when oil gets that high, which it should not be, absent a major global event. With the European Central Bank and the rate hike, it is important to also mention the dollar parity. Has the euro gone below the dollar at this point? Gareth Soloway answers.
It did at one point, right? So if we look at the EUR US dollar, it briefly got below 1, and then you saw the bounce right here. So here's your parity where the dollar was exactly equal to the euro. It got just below there. And one of the things I teach in my services is that these even numbers have a psychological impact. So trading is technicals, which are charts, which really are a representation of human emotion and how the masses feel. So when the masses are bullish on something, you see it go up, and buyers come in, and when they're bearish, it comes down. So it's all about how emotion is playing in. And so there's something about an even number where when you touch it, that's where the buyers will come in on the euro, and they did just that. Now, in a month, we may be much, much lower, but at least in the near term, that was a good opportunity to see that bounce in the euro.
That means there is no longer parity, right?
The euro is back greater than the dollar, meaning €1 gets you $1.02, $1.02. So it's really semantics, right? A
Yeah,
2-penny difference, but I mean, yes, technically the euro has bounced back above $1.
Where does Soloway see things going for the remainder of the year?
Yeah, so I think my guess is you'll see some more downside over the next month or so in the dollar. The dollar is going to have a ton of support right in this range right here. You have a bunch of pivot tops. And I think that what we're going to see is later on this year is that we're going to find out very quickly that the Fed has raised interest rates too quickly. So they've tried to play catch up. They finally realized that the free money printing presses were a detriment to the system. It caused massive inflation. They weren't prepared for that. So what do? I mean, it's human nature 101. We like to think the Federal Reserve is immune from this, but they aren't. And essentially, they went into massive hiking. And what that did is it slammed the brakes on the economy here. And I think we're slipping into a recession. I think by year end, we'll probably be seeing that. My guess is, the dollar again, once the printing presses start up again, you'll see the dollar continue lower. And again, I don't know if the printing presses will start up this year, but I think 2023, you'll see easing, at least in interest rates versus tightening or pause. And I think that, again, a lot of people will say, oh, the stock market should rally on that. I disagree. I think that with inflation remaining high, and my guess is it'll come in to like 5-6%, you're going to see that we have a scenario where the Fed they can lighten interest rates or bring interest rates in, but they cannot stimulate like they have in the past to get us out of a recession. And my biggest fear is that we're going to be stuck in kind of this gray recession. It may not be ridiculously hard, but it's just going to be a long drawn out recession, because if you look at past recessions, right, the Fed has always come out gangbusters, and this situation, this time they can't do that.
Soloway claims this is his biggest fear, that there might be a long period of time when the Fed cannot do anything and the markets, in fact, the economy as a whole, is kind of in the doldrums. Well, the higher forms of inflation could take us into a stagflation environment, and we could be headed towards a recession. But a lot of what we have experienced we could say is on par or greater than what we experienced during the Great Depression. So what if we keep going in the direction of rate hikes? It is going to kill the stock market, and if we reverse course and inflate everything, it's still going to kill the stock market. So the Federal Reserve and all central banks at this point are damned if they do and damned if they don't.
But I 100% agree that you're 100% right, is that there's no good outcome here, right? So if you continue to tighten and try to get inflation back to 2%, you're going to send the economy spiraling into not just a bad recession, but probably worse. And that if you say, okay, well, we're entering a bad recession, let me go printing to the printing presses again, well, then you're going to just see inflation soar not to 8 or 10 or 11%, but probably to 15 or 20%, which then is going to cause a massive collapse on its own. So like I liken it to like, you have the patient on life support. And at this point, like, there's no real good scenario where the patient is going to survive. You have to have that patient just unfortunately pass on. And then at that point, maybe when we get a reset, maybe things can be done right. That's my hope. And again, I'm talking like years and years down the line, but my dream is that, unfortunately, it sucks to say it's a dream because it's not something I want, but the economy and the system needs a reset. And from that reset can hopefully come good things, like things done in the right way.
Finally, does Soloway see more upside with Ethereum as with Bitcoin? The chief marketing strategist weighs in on this.
I do. So you've had these pause days here. Even today, Ethereum's starting to creep up. The first big challenge for Ethereum's at 1700, this pivot low, this area right here, and all this sideways chop. And then if it gets through 1700, I think you make a run at 19 to 2000. So again, I would say if Bitcoin's going to go to 28 to 30, I think you probably get to 2000 on Ethereum. And then again, if you only get to 25.5, then maybe Ethereum stops around 1700. But in either case, I still have more upside here to go.
Thank you for watching this video. What are your DCA positions for the coming weeks or months? Let us know in the comments section below. Don't forget to smash that like button, share our video with your friends and family, and subscribe to our YouTube channel. See you on the next one. Until then, bye.